The banking crisis seems to be over for now, but is it really? It is beginning to look like the crisis is going to morph into a different form. Initially, it was a liquidity crisis, and the US authorities stepped in really quickly to pump liquidity into the system to restore confidence. They even got the largest banks in the country to help out First Republic Bank by placing billions of dollars in the smaller bank. However, having so much of their assets locked in long-term bonds with very low yields means not being able to pay much more to their depositors. Latest data shows that billions of dollars are flowing out of the banks, both big and small. Evidence shows that the money is flowing into money market funds. In the last 3 weeks alone, more than $300 billion flowed into money market funds. Depositors are fed up that they are not getting paid well enough for their money deposited with the banks. Cash is increasingly a good asset to hold, but for sure, not in a savings account. These depositors don't even care that the money market funds are not insured. The Fed now expects credit to tighten, which could do some of the job in fighting inflation for them. Federal Reserve Chair Jerome Powell said that Silicon Valley Bank's collapse and the banking system upheaval it triggered are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. The situation could well morph from a liquidity crisis into a credit crisis. So, although a tightening of credit could bring inflation down, which means a weaker case for raising interest rate, if businesses cannot access credit, they will struggle. After all, credit is the lifeblood of business. A shortage of cash available for lending is one in a series of cascading events that occur in a credit crisis. So, if there should be a pause in the Fed's interest rate hikes, don't rejoice too soon, because things could be getting a lot worse. The U.S. economy is going to crash land into a recession in the second half of 2023. According to Allianz, rapidly tightening credit conditions, exacerbated by the banking crisis, will fuel the downturn. Allianz said, "Things could get really ugly. What am I going to do as an investor in Singapore? Stay far away from U.S. commercial real estate investment trust. It is better to be safe than sorry."